Welcome back. Tech is taking the hill. Google CEO Sundar Pichai is set to appear before the House Judiciary Committee later this morning. The Google CEO expected to answer questions on the company's business practices, including its handling of user data and potential political bias. Joining us right now to talk more about that. First, though, here's what House Majority Leader Kevin McCarthy told me on Sunday Morning Futures about this hearing. You've got the CEO of Google coming in to testify. What are you looking to get out of that?
Well, this is something you have, too, that we've looked at this for quite some time because technology affects so much of our life. 2/3 of every adult American gets their news from the internet.
That's incredible. Yeah.
But there's no other company that has a greater control over the internet on searches than Google. And Google has not been coming to any of our hearings, whereas Twitter, Facebook, and others. 90% of all internet searches goes through Google.
Are we going to see a regulation? Are we going to see a bill come to the floor about bigger power?
This is why we're having the hearings.
Okay.
What do we need to protect? What do we need to stop the bias? What do we need for competition?
Joining us right now is Managing Director of Equity Research at Wedbush Securities, Daniel Ives. Good to see you, Dan. Thanks very much for joining us. What do you think comes out of this? And as an investor, what do we need to focus on in terms of these technology companies?
Look, as an investor, it's really regulation. And that continues to be the sort of big threat for big tech. I think right here, Google's really been the last one to go in front of Congress. So I think really in terms of how they navigate the data privacy, but I think there's also a big focus on China. Because if you look at China, especially with everything going on, Google, how they're looking to potentially get into China from a search perspective, their view there, as well as just the overall privacy. And that's really going to be front and center here. But big tech's watching this because, this continues to be an overhang on the space from a regulatory perspective.
Yeah, speak about China. I mean, Google decided to work with China with its AI, and yet it said that it didn't want to work with the Pentagon. It didn't want to be anywhere near the U.S. government, and yet China has this national score, individual scores for people, where they're watching you at all times, spying on you, and then at the end of the year, you get a score. And that may dictate if you can get on a plane, get on a train, get a mortgage. I mean, it's incredible. And Google is obviously enabling that.
Look, and that's why they find themselves in the crosshairs. Because you think about what's happened broader with China. You look at 5G, you look at this battle between U.S. and China across tech. You're going to see more and more U.S. and tech are going to be battling, specifically on China when it comes to 5G AI, and Google is sort of at the center of that.
Yeah. And with regulation in the U.S. is very different from China, very different from Europe, where they just passed the GDPR, General Data Protection Regulation, this year. How do these companies navigate those waters? What kind of expense does that cost? And how do they get from point A to being able to deal with all that?
Yeah, I mean, look, GDPR, I think that was one, there was a big fear going into that in May. I think so far, that's one that's been pretty contained. And I think that's going to continue to be sort of a unicorn in terms of just how much regulation you see overseas. But look, no doubt, I mean, you look from an investor perspective, just given what we're seeing in the market, the last thing you want is something to come out of left field today. And this also is given what we saw yesterday with Apple getting Qualcomm and China. So that's the broader backdrop of tech, where some of these things were never factored into the valuations. Now you're seeing it.
How do you trade Apple? I've owned Apple for years. Obviously got a big profit in it. It's got a great run-up. But right now it's trading on geopolitical news. These tariffs, as they kick in, could hurt the global supply chain significantly. Do you stay away from Apple completely here, or are you finding some type of value here at a lower valuation?
And before you enter, let me just say that a Chinese court is now ordering Apple to stop selling older iPhone models after it found that the company violated 2 patents held by Qualcomm.
Yeah, that was a major gut punch that really came out of left field, because if you look at the Qualcomm Apple situation that's gone on for a long time, you look at what's happening in China. Look, China is going to be 20-25% of the incremental growth for Apple. So if you look at the tariffs, you look at the situation right there, we continue to believe that there's value in Apple here where it's trading. But no doubt, I mean, if the 90-day period comes and tariffs get upped to that 25% and potentially on iPhones, that really could be a backbreaker for Apple. But right here, we continue to be buying that name from a valuation just on an iPhone.
Yeah, I mean, the stocks now are at their lowest earnings multiples in years because they've taken such a beating. So what are they trading at now?
Yeah, I mean, if you look right now, I mean, look, $15 of earnings for Apple. Okay, you're talking about something that's now trading, for a company that's typically traded 12 to 16 times, trading below that historical range. So you're starting to get now down to trough levels where you're starting to bake in some significant bad news into Apple. Look, every day the sun comes up and there's bad news in Apple. So I think it's been just a massive string of bad news that we've seen the last 6 weeks. But ultimately, a lot of it's self-inflicted, because you look at Cook, once they took away that iPhone metric and transparency decreased, that set off the storm here, and you've just continued to see it through the suppliers.
So do you not buy the services idea that services going from $10 billion to $50 billion, and Apple is now a services company? You still think it's a hardware company that is dependent upon that sale of the iPhones for their valuation?
Look, it's a services-led hardware company. I mean, you're talking about the $50 billion in services,
Correct.
2020. Yeah. That, from a sum of the parts, we believe that's worth about $400 billion, that services business. So right here, you're getting the core iPhone business for, call it, $300 to $400 billion. But nonetheless, it's a hardware iPhone business in the near term. 60%, that's where it comes from. So right now, that's going to rule the day, which is why right now the disappointment we've seen with 10R, specifically out of China, that's really been with the gut punch for Apple.
So you still like the stocks?
Look, we continue. We're not waving the white flag on Apple. We are buyers of Apple here.
How about Google?
Look, in our opinion right now, on large cap, we'd much rather own an Apple versus some of these other names in large cap, just given the valuation and given we know that there's a cycle there with regulatory risk, we believe minimal.
Oh, it's Google on the hill today, so we'll see what happens with the Alphabet parent of Google. Dan, it's good to see you.
Great to be here.
Thank you so much. Daniel Ives joining us.